So, Chair Powell, you and your colleagues have offered three reasons to cut rates: a lower neutral rate that may have made policy a little bit tighter than anticipated, the global slowdown, the darker risk picture from the trade tensions, and this desire to recenter inflation and inflation expectations. I wonder which of those factors, if any, weighs most heavily on you, and more importantly, is a quarter-point cut really going to address all of that, let alone any one of those?
So I actually think different people have different weightings. Has been my experience on those things. You mentioned lower R-star, trade slowdown, and I would actually add the lower natural rate of unemployment too has moved down. All of which kind of point to more accommodation. So again, I don't think asking about a quarter point is really the right question. I think you have to look back over the course of the year and see the committee moving away from rate increases to a neutral posture to now a rate cut. So I think we've been providing, and that affects the forward rate path, and it affects financial conditions, and financial conditions affect the economy. You see an economy which is actually performing pretty well. Growth in the first half of this year is about the same as it was in all of 2018, and actually a little better than our forecast for growth in 2019, at the end of 2019. So I think in a way that's monetary policy working. And again, I wouldn't just look at the 25 basis point cut as the right question.
I could follow up. I guess in May it seemed as if you were setting a higher bar to cut rates. There would need to be a deterioration in the outlook. In June, you seemed to suggest that if the outlook didn't improve, there might be a rate cut. Where is that bar right now? Because I think there's some confusion about how the committee's responding.
Yeah, so we, as we noted at the bottom of the statement that language which really says how we're thinking about it. So it says, as we're contemplating the future path of the target range, the federal funds rate, will continue to monitor the implications of incoming information. It talks about that language. So, I can't. All I can tell you is we'll be looking at weak global growth. We'll be looking very carefully to see how that's happening. And I think you learn every cycle. You learn about these things. So we will see whether growth is picking up, whether it's bottoming out. We'll see that picture. We'll also see on trade. We're going to be seeing. I think we've learned a lot on trade in this cycle. I think we'll continue to learn more. And on inflation, we will. So in addition, the U.S. economy itself is the performance of the U.S. economy will enter into that. So I would love to be more precise, but with trade, it is a factor that we have to assess in kind of a new way. Those are the things that we'll be looking at and, in making our decisions going forward.